All right, we're getting closer. Only a few days left until we kick off our Emergence 2021 online masterclass for both retail traders and independent investors. So if you haven't signed up already, make sure you do so. Go over to www.tier1trading.com or click the link in the show notes below. But if you want to attend live and secure your seat, or if you want to get the recordings and view it later at your own leisure, you need to be registered. All right, see you guys in a few days. Hey guys, I got a great episode for you today. We're going to talk a little bit about the power of 1% change and how it can have a massive impact on your future. Smaller range, higher volume, obviously a positive bearish candle. If you're looking for a short, that's something that I would take into account, those small little signals. So we haven't talked about it in a while because, once the new year started and we got back into the live rooms, that's basically put a pause to any of my testing. But for you guys that were following me during the winter, that's essentially what I was looking at as far as the volume spread analysis. I wasn't looking to make I was looking mainly on a daily, but you can use it any time frame. I wasn't looking to make any new strategy. I was just looking for a 1% change. Is there anything else that can give me the smallest clue? And that's the key with trading, right? At least with my trading, we talked about before, as far as your strategy goes, a very easy way to become a more efficient and profitable trader is do one or two things in your strategy. It's not necessarily improving your entries, although that could be something. But one, how can you maximize your targets? Can you get a little bit more on targets? And a little bit more doesn't necessarily mean shooting for higher targets. What could a little bit more mean? I think a lot of people associate, a little bit more, I got to shoot for larger targets. Is that always the case? Is larger targets always going to make you more money? You would think so, but not necessarily, right? Because the larger target you have, the lower your win percentage is going to be, right? That's just, and that's mathematics, right? The larger you shoot for targets, the lower your win percentage will be, right? If you shoot for if you shoot for targets that are closer to your entry, your win percentage will be higher, right? So larger targets doesn't necessarily mean that you'll make more money. What you want to do is you want to find that mesh point, right? How can I get as much out of the market without getting to that point where it starts to have a negative effect? I'm trying to think of an example, kind of like they don't make seesaws anymore. You guys remember seesaws, right? In the playground. Playgrounds are stupid now. They're all safe and stuff, right? I used to, put someone on the end of the seesaw, and then someone would come around and distract them. Then all of a sudden, we get the big boy, right? The hefty friend, and he'd come by and jump on the other end, and boom, rocking him in the air. Got him, right? So many good skills learned on the playground. Launch him, yeah. But imagine walking on the seesaw or any type of lever, right? You're walking towards the middle, you're walking towards the middle, right? Eventually, as you get closer and closer, the seesaw starts to dip to the other side and you start going down, right? So you can imagine that when we talk about maximum adverse excursion and maximum favorable excursion, which are fancy words for make the most out of your trade, lose the least out of your trade. Essentially, it's that. You're walking that seesaw, You're walking that seesaw to see how far can you get before it starts to tip in the opposite direction. And when it tips in the opposite direction, you've gone too far. So targets are the same way. That's one way to improve, is see how much can I shoot for targets. Again, following up on the question and answer to the private group we had yesterday, right? We talked about, we were talking about patterns specifically, but for pattern formation, right? Well, we're typically talking about initial targets at a 3 to 2 Fibonacci retracement. Well, what about a 50%? Okay, 50% works a little bit better. Okay, what about a 618? 618 gives me more profit. Okay, what about a 786? And if you guys are unfamiliar, these numbers are getting further away from your entry, so you're looking for more. Let's say you get to a 786, and all of a sudden the 786 is lower. Okay, now I know I've gone too far. So increasing your distance for target is one, but that has to be paired with your hit rate. So targets could be increasing your target could be one of two things. One, it could be getting them further away, or increasing your win percentage. And ideally, you want to find that mesh point where you have the perfect win percentage and the perfect target distance to maximize what you're trading. So that's one way is targets. Another way is your stop loss, right? How can I be wrong as quickly as possible without having my stops so close that I'm wrong but still right, right? So how can I have my stop losses as far away as far enough away to give myself enough breathing room to really ensure that I'm wrong, but not so far that I give back extra when I am wrong? Those are two ways that you can improve your system as a trader. And again, it's doesn't seem like it, but let's say if you can increase your reward by 5 pips on average per trade, or decrease your risk by 5 pips per average on trade. It doesn't seem like a lot. No one's going to wow at you if you throw it on the internet and be like, hey guys, I just found out how to decrease my stop loss by 5 pips per trade. I'm like, so? Right? Think about the bigger picture. Think about how many trades you take in a month. Think about how many trades you take in a quarter, in a year. And then ask yourself, does 5 pips per losing trade really make a difference? And let's say you do it by, you take 5 away from your average loss and you add 5 to your average win. Now all of a sudden that's a 10 pip turnaround, right? It's the same thing with reducing losses, right? I get excited when I can take my win percentage from 50% to 55%. Why? Because those losses, or even if you have a rule about moving it to break even, those losses all of a sudden in a way become wins because you make more money by losing less money. So it's amazing how those small changes can have an effect. It's very similar to what we talk about outside of trading about the power of 1% change, right? Where, I won't go through the whole looking and walking to the ocean thing, but you shift your direction by, if I told you to, stand in your spot right now and take 10 steps forward, and then go back to where you're standing, or mark it on the wall, and go back to where you're standing and shift 1% to the right and take 10 steps forward and mark it on the wall, it's probably going to be a minimal change, right? Your mark is going to be basically right next to the previous mark. But all of a sudden, if we do the same same type of experiment, and I say, okay, stand where you are and walk 100 miles forward, and then go back where you are and make 1% change, or shift 1 degree to the right, and then walk 100 miles forward, all of a sudden, you're not even going to be able to see that original mark, right? Because 1% degree of change over 100 miles is massive. 10 steps, nothing. 100 miles, massive. So you got to think of your trading the same way, right? It's not about, you're not going to see it in your weekly report. Richard's not going to look at his weekly report and be like, ooh, look at that, I made 1 pip. Whoop-de-doo, right? But bigger picture, you're going to start to see some massive changes. So with the volume spread analysis, something that I was looking to do is, can I become a little bit more efficient with entries? Is there any clue? Again, you guys know I want to be more I've been getting more aggressive with entries, and I want to continue to get more aggressive with entries. Is there any clue that I can get that's going to allow me to get 1% more efficient with my entries? Right? Because I can tell you this. If we're looking at a situation where I have an opportunity to sell at market versus wait for a lower low, lower close, that's a massive difference, is it not? On the screen that you're looking at right now, and if this turns out to be a podcast, if I remember to actually make it into one, I'm sorry you can't see it, but that's, we're looking at a difference between an entry at 108s versus 107.50s, right? That's a 50 pip difference, right? That gives me 50 pips of more reward. That gives me 50 less pips of risk. In fact, I would say in this scenario, probably makes it from a trade I can take to a trade I can't take, because given that lower low, lower close, I wouldn't be able to make the risk reward work. So those small things make a massive difference. I don't know how we got in that rant, but I liked it. That was a good one. Hey guys, Akil here once again. Just want to say a big thank you for listening to today's episode of the Trading Coach Podcast. If you want to support the show, the best thing that you can do is leave the podcast a rating and a review wherever you listen to this podcast app. Word of mouth is the biggest way we've been spreading our message here, and the more traders and the more people that we can impact, the more widespread our message will be and the more lives we can help. All right, thank you in advance, and I'll see you next episode.